Welcome to the Accounting Cycle Explained. For our purposes, there are 9 stages in the accounting cycle. The first stage that we have, and let's kind of just draw this out, I guess. The first stage we're going to have is going to be, let's see if we could draw an oval in here. Here's the accounting cycle. Big, beautiful ellipse. In any case, stage number 1, step number 1. This is to collect and verify source documents, right? Collect and verify source documents. What might they be? Well, you could say a source document's probably going to be maybe a receipt, an invoice, a memo, a check stub. There's other types of source documents that we come across. But step number 1, for our purposes, collect and verify source documents. Well, once we've verified our source documents, we need to put some eyeballs on them, right? We need to analyze the transaction. I need to look at the receipt and I need to ask myself, is this receipt from dinner with my wife for our anniversary, or is this receipt for a lunch appointment with a client? Is it business related? Is the supplies, or are the supplies I bought at Home Depot for the home, personal use, or are they used in the supplies for doing a job? These are very important. This is part of analyzing a transaction. And a lot of people, small entrepreneurs, will just keep a leather envelope or something inside their van or their truck, and they'll throw all the receipts in there. Maybe once a week they'll analyze the transactions to make sure that they pull out anything that's not business related. Because you don't want to get yourself in trouble with the man. That's what it all comes down to. This third step, well, it's finally we're doing some accounting, right? If you want to look at it that way. The third step is going to be to journalize the transaction. Where do we journalize it? Well, let's ask ourselves. On the general journal. So the third step is to journalize. What do we do when we journalize? We do it in date order. We work from left to right. We do one transaction at a time. And that's how we do it. There's the golden rule summed up for you. One line, one transaction, working from left to right. So now that we've journalized, we have to then post, which is the part of those 5 steps that we had talked about before. What do? We are posting the transaction to the ledgers. So post to where? And where is that form? That is called the general ledger. Each individual account that's affected has its own ledger account. So that is step number 4. So remember the 5 steps in posting. Ledger, 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 general journal, right? That's another video. The 4th step, well, now that we have taken the transactions in the chronological order of the general journal and ledgered each one of them, or posted each one of those transactions, we need to make sure that we haven't screwed things up. So we need to do a very quick and dirty trial balance. Right? Well, trial balance is making sure that your debits equal your credits. It doesn't say that you put it in the correct ledger account. It just says that your debits equal credits. It's not speaking to the veracity, whether it's good, good information. Trial balance. And that's to make sure that your debits equal your credits and your books are balanced at that point. So there's step number 5. Step number 6. Well, step 6, we're finally going to do a worksheet. Prepare a worksheet. That is step 6. And you remember what a worksheet looks like. It's the 6-column worksheet. The 6-column worksheet has in it your income statement and your balance sheet, along with a list of all of your accounts in the trial balance. This is where you're going to determine if you have a net loss or a net income. It's important information in order to go into step number 7. Step number 7, we are finally doing some real deeper accounting, a deeper dive, if you will. And step 7, we are doing financials. So we are preparing financials. Which 3 financials are we preparing? Well, we're going to do an income statement that deals with the net loss or net income. That's kind of a faraway E, isn't it now? Income statement. And then the number 2 is going to be a statement of changes in owner's equity. That's where we recognize whether the net income increased, which it should have, or the net loss decreased, the value of the business. So the statement of changes in owner's equity. It's all predicated on the income statement, which determines if there's a net loss or a net income. The third financial, well, once we've done all these different things, we need to make sure that everything is still in balance. So the third one is going to be a balance sheet. So that is step number 7. Well, step number 8 is that we have to then journalize and post our closing entries. We're getting close to the end of the accounting cycle. There's 9 steps in our accounting cycle. And once you finish the 9, you just begin all over again in a different accounting period, correct? And you want to carry the balances from the balances from the permanent accounts into the next accounting period, and making sure all the temporary accounts are closed. So now you need to close any of those temporary accounts. That's what's going on here. So we are preparing 2 things. This is to prepare a post, which, right? Let me rephrase that. We are not preparing the post. We are journalizing and posting the closing entries. And posting, it has to be in this order, closing entries. That is step number 8. And step number 9, let's say after we have journalized and post, so we're going to say prepare a post, which means after. Does that make sense? Closing. So all the temporary accounts have been zeroed out. Trial balance. And that is your 9 steps in the accounting cycle. Will you need to know all 9 of these? Absolutely. What is this going to be worth to you? Well, it's going to be worth 9 points towards your final. Collect and verify, analyze. Journalize to the general journal, post to the general ledger, do a trial balance, do your worksheet, the 6-column worksheet, prepare your financials, your income statement, your statement of changes and owner's equity, and your balance sheet. Then journalize and post your closing entries, and then finally prepare and post closing trial balance. So prepare a post-closing trial balance as number 9. And then we get the pleasure of doing it all over again at the beginning of the next accounting period. Well, that wraps up the 9 stages of accounting explained in 11 minutes and 14 seconds, a little on the long side, but please stop the video, take notes, learn it verbatim. What do we mean by verbatim? Word for word, letter for letter, in order. So there's a couple that are easy to remember, and there's a couple that are a little more tricky. But a 6-column worksheet, if anybody gets that wrong, I will be taking extra points off for you. Okay? Step 6, 6-column worksheet. Good Lord. All right, good luck, guys. Talk to you soon.